Okay, so in this video I'm going to be doing a EU trade breakdown on a trade I took yesterday, being Friday the 13th of January 2023. So I will do a top-down analysis showing you everything I saw before, during and after the trade. So beginning here with this weekly demand zone to the left. Now effectively this was a weak low, as this low didn't take out this high here. So the expectation of a weak low is for it to fail, which we saw eventually. Market comes back into the low and we saw the reaction and the low has failed. We're now looking at our pullback phase. But assessing our weekly demand here we see the initial reaction there. We saw market push up, market then push down, taking out our low, and then we then see another reaction and a strong push to the upside. So another reaction there. We then left a daily demand zone like so. So market pushes up, it then pushes back down into our daily zone. We then see another reaction, strong push to the upside, and then ultimately we see our zone fail. So we saw the daily demand zone fail and we've seen the weekly zone fail, which is also now our low, so our break-in structure. So once we see demand fail, this then leaves us supply zones being flip zones where we could look to trade from on potentially on the way back up. So you got a couple within here, but they're not relevant to the trade, so I will miss them out. But we have this extreme here, and to which we mitigate this during, well, midway through December. So this was our initial reaction to the supply zone. We then have some sort of supply within this wick where price ranged, it then pushed back into the supply, it then continued to the downside, and then eventually demand regained control somewhere within this bit of range as well. And then market strongly pushes back to the upside in a very aggressive manner. We then left a potential demand zone there. So assessing what we've seen here, we've seen a break structure there, we've also break-in structure here. And the expectation after you break structure is a pullback. Pairing that with the fact that we saw market so aggressively push to the upside, we've now left an imbalance in the market where market will then look to come back and rebalance the market. So my bias was, after we took this high, was to look for sales, to then look to sell the market to come back into within here, for example, and then where I could look to buy. Now looking at how I can get involved, we can see here to the left that we had this demand zone here where we saw market push to the upside, and then eventually we come back into the extreme. We then see a reaction here where we push the upside, and then eventually market then fails, this demand then fails, and then the high that is responsible for the failure of this demand zone is this, which we can see actually gets swept. So if I go to the foil just to clear it up for you. So we saw multiple reactions. Here we see a strong reaction. We then push to the downside. We see an even stronger push to the upside. We then see it then take out this demand zone. This then left us a supply zone within there, which then market comes back and sweeps it. This then gives us a liquidity POI within this daily wick. And as you can see, on the Friday or the Thursday, I think late Thursday, we mitigated it. So coming into the 15-minute, we see our initial reaction to this daily supply there. We then see a push down, market pushes up, and it sweeps the high. It then breaks structure to the downside. So what we can see here, we see now a liquidity POI being made there, and then also we have a potential zone just below. So this is our, well, it's not our last point of demand, but it's a bit of demand before we took out this high. Now the real last point of demand would be within here, but you don't actually see a reaction to it, it just blows straight through it pretty much. But we see our reaction here. Now again, if I go to the 5-minute, we can see this is our reaction there. We push back up, and then this high that I'm on now is basically the reason that this zone failed. So as you can see, it then gets swept as well. This is very similar to the daily supply creation that we saw to the left. So it's basically the same model. If we go back on the 15, it's then effectively a liquidity POI as well. So we have this supply zone and this supply zone where I was looking to sell from. However, I didn't take anything within here, so I just played price on like so. So we came into here, and then this low held like so, and we come back into our extreme POI here. Now, as you can see on all time frames, we are heavily bullish, being the weekly, daily, and the 4 hour. And then again on the 15 minute, we are still bullish. We've seen our initial shift to the downside, but we need to see, well, for the reversal to happen, we need to see supply really hold, and then we could potentially look at something like this occurring, like so, and then maybe we come back down into something within here or within this 15-minute demand there. So, due to the fact that we're so heavily bullish, this is highly, well, very much counter trend. And for me to get involved with an entry, I need to see either 15-minute realign, or on the 1 minute, if I'm looking to sell from either this supply or this supply, I need to see confirmation or double confirmation. So I want to see demand fail, supply hold, demand fail again, and then I can look to enter. So order flow is still bullish at this time, so I'm going to need double confirmation on the 1 minute if I'm going to take a trade. And what we see is that this 15-minute structural high got swept coming into our 15-minute supply above. So we have this bit of demand, which is effectively our last point of demand for the mitigation of our supply, and the last point of demand before the sweep of this 15-minute high to the left. Now we've tapped into our POI, we see a push down where it's reacted to our demand, it's then pushed back up, so we can potentially see this bit of supply holding and playing price on. So our last point of demand has failed, so that's one bit of demand failure. We're now coming into this bit of demand, and we see what happens here. We're reacting, and that demand has failed as well. So we send 1, 2 bits of demand fail. So I now need to see some supply hold. So marking up this supply here, this bit of range, that is a flip of this demand. We also say we mitigated these sell to buy wicks here on this last point of demand, as you can see, like so. So let's see if it comes back into here and if it can hold. So it's a strong push in. We see a reaction. It's still holding. Still okay. Now it's failed, as you can see, like so. Let's see what happens. Okay. And what we can see here, we can see a demand chain being formed, like so. So now we have one bit of supply not mitigated, which is this extreme. So let's see if we can see supply hold there, and it ultimately fails as well. So let me just clear this off. Okay, so we began to see our demand fail, but we never saw supply hold, so there's no entry there for me. And now what we're potentially looking at is we could say we've swept this high, which is our potential early sellers from this supply zone, and we could look to get involved using the sweep of this high now. So our last point of demand before the sweep of this high, or the failure of this high, was within here. So let's see if we come back into this demand. So we've mitigated it. It's now okay. So what we're seeing now, we saw a push up, taking out our high, come back into this demand. It's then pushed back up, sweeping this high. So we have a bit of supply there, and what we've done, we've created a demand chain somewhere, or something like this, like so. So last point of demand before the sweep, we push back up, we come back down, we mitigate it, we push back to the upside, it then holds this bit of supply, but this low gets taken, and we push back up and we swept at this high. We then come back down into our demand chain, it then holds, but then the supply is held, and we've now seen our first bit of demand fail being there. So let's get rid of that for now. And then, in fact, this low has gone as well. So it's in 1, 2 bits of demand fail. Now, again, we need to see some supply fail. So we now have some supply within here. We have a range in the market, being these 4 candles. So you can mark the whole of the range, or maybe you could look to refine it to there. But I'll mark the range for now. And now, again, we need to see some supply hold. So play and price on, and do we actually see a complete failure there? Ooh. Let's draw this. Okay, so that extreme is actually holding within there. It's now pushing us back into our supply. So can we hold here? And we have. So we see our range supply here as held, and we've taken out our last bit of demand chain here. So we've seen 1, 2, 3 bits of demand fail, and we've seen our first real bit of supply hold, where we've now taken out this low. So this being my floor, my first level of respect, I've now seen supply hold, so I can look to get in the market, and where I was looking to enter was off of this wick. So essentially now we've seen a supply chain occur that's taken out our demand chain. And if I play price on a little bit, so if we were to refine our demand to this wick here, where we saw a bunch of reactions to, so this being our first reaction, we come back into our supply, we come back down, we're reacting to it again, and then eventually we see this candle here take out our demand. And then what I was using this as was liquidity, because we hadn't swept any new liquidity within this push to the downside, so I needed more liquidity taken. I needed more liquidity to be taken so I could look to enter from here. Or if there was no liquidity here, what could have potentially happened was this wick got swept and we could have played into high within this chain, or again maybe the high went again. But we generate some liquidity here, being this decisional of a flip. So I had that as liquidity. You could also say that after we broke the low, we come back, we chain off this demand, and we now have a new high in market. This could have been used as liquidity as well. So we've got 2 points of liquidity there that were below our entry point, being this wick. So I've seen multiple demand failures, and I've now seen supply hold. So I was then looking to take a sell from this wick. Now you could have looked to have had a market execution or a sell limit. Now what I was doing a market execution due to the fact that we had within this supply range here, we still had this unmitigated refined zone. So I was a bit wary that price might want to come back and actually tap into it. So at this stage you could either maybe look to cover both zones, or take a loss potentially on this zone to again get involved in this zone. But what I looked to do was take a market execution where I could basically get filled higher up in the zone, which basically would then reduce my risk to then, if I took a loss here, I could then still get involved within the extreme somewhere. So I was waiting for market to come back into this zone, and then now we've tapped in, and at some point I market executed. So let's work this out. So half a pip, and then I entered on, I believe it was 8.8 or 8.7. It was somewhere within here. So effectively I almost halved my risk. So rather than open on having the trade on the open, I market executed within here somewhere. So I almost, a third of my risk was reduced basically. So I market executed there, and then looking at my break even point would be this, as this was the low that was responsible to bringing us back into price here. So now looking at our targets, now essentially what we have here is a weak low. Now a weak low usually will not hold. Of course sometimes they will hold, but my expectation was for this weak low to fail. So my first target was this, and then I also had this demand here that was pretty much from the news, I think, or it was the aftermath of the news that actually brought us back up into this daily supply here. So my full target was this down here, and then to partial at this Asia low or this weak low pretty much. But playing price on, let's just see what happened. So I'm in, we see a really strong reaction, and then I'm break even pretty much within 5 minutes of entering the trade, which is really nice to see. And then continuing price on, you can see we melt down to the downside. And then what I'm going to do here, I'm just going to mark up this 15-minute demand as what occurred here. So we took out that actual bit of demand, and then due to the fact that how the week went, it was very rangy, and we saw a lot of weak structure holding and then taking out highs. Eventually we saw with the demand range. So I was a bit hesitant on being in this trade and not taking anything from it. So if we come down, we saw this week a low hold and come out to break even, that would have been pretty devastating. So what I wanted to do, I just wanted to take some profit. I wanted to pay myself. So at some point within here, I took 50% off of the order. So I think it was around about here. So I took 50% off. We then see a stronger pullback, and then eventually suppliers kick in once again, and we continue to the downside. And then at some point within here, I took another 25% off. And then eventually we tapped into our demand zone here, which I full TP'd at. Okay, so that concludes the trade breakdown. I hope you can get some value from that, and I'll see you in the next video.